Alright, ladies and gentlemen, welcome back to another video. Thank you so much for joining me today. I've been documenting on this channel now for seems like forever. I think it's been 8 months now, or 7, I'm not sure, of selling options, trying to make some extra income with a subset of my portfolio and just seeing if I can make it work. And then what I do is I take all the premium I gain from selling those options and reinvest it back into some of my favorite companies. And if you want to follow along and see how I do as time progresses, what I do well, what I don't do so well, and you can learn from me, hit that subscribe button. That way you don't miss any future videos. And if you want to help out the channel and learn some supplemental information and to go over everything you need to know when it comes to the basics of selling options, I have a course. It's linked down below. This is the only way the channel makes money, so it's much appreciated if you even consider it. I mean, other than that, I do this all for free. I do this for fun. This is something I like to talk about, and it's always something I think about. I think about this daily. So maybe it's an unhealthy obsession. I'm not sure. But thank you as well for those of you that watched the last couple of videos. They were very, very well received, and it doesn't go unnoticed. I talked about in one of the last couple of videos how I made some pretty, I'm going to say bad for a lack of a better word, trades when it comes to Robinhood stock. I sold a lot of covered calls when it dipped to the low 40s and high 30s, I think. And then if you're familiar with Robinhood, it's been coming back strong. It went all the way up past 60 now. And now I'm holding these covered calls I sold, and I'm missing out on gains. And quite frankly, that's just something that happens when you sell covered calls. That is the major risk of selling covered calls, is you miss potential gains. Because of that, that's why you make premium, because people buy those calls from you because they're borrowing the shares to potentially benefit from borrowing them. So in particular, I have one expiring this week that I'm just tired of rolling my Robinhood covered calls, which is typically what I do when they go in the money. I just roll them up and out in expiration, and lately those expirations have been pretty far out. But I have this $47 call, and yes, I did make money from premiums from this covered call. And yes, when this does get exercised Friday, I am going to make a little bit of capital appreciation. Is it up to like $1,600 worth if I were to sell it at the current Robinhood price? No. But I'd say with the premium and with the capital appreciation, it's probably going to be close to like $400 or $500. And at this point, I think it's just going to rely on me changing my mindset and just thinking about, okay, I'm selling options for cash flow, and this is what comes with selling options. And money is money. I'm still going to make money at the end of the day. Am I going to make as much? No. But I had someone comment, and I really appreciated this because I needed it probably the most when I made this video. They said they sell a lot of in-the-money covered calls, and to really never marry the stock. Let the shares go and buy them back eventually on a red day. Or in my case, start selling puts again on the stock, which is really what I should do, I guess. And that's what's driving me to just let these guys go come Friday. I still have other covered calls on Robinhood that I've rolled, so that's fine. But this one in particular, I'm just going to let it go, and I'm going to return to selling puts on Robinhood. And then if a red day comes soon, the more the merrier. Just because a lot of stocks have gone up a lot lately doesn't mean the market's still not volatile. I can see it going down just as easily as I can see it going up, to be honest with you. So I guess I want to get that out of the way. I'm going to let these guys go. And in terms of trades that I've made lately, it's been very, very quiet. So far this month, I have made in premium almost $1,900. I said I would be happy with $2,000 this month because a lot of my shares are tied up with current options that I've sold. And so I don't have a lot of room to sell more options this month. So the fact that we're getting close to 2,000 already, and it's May 14th, has me pretty hopeful that maybe we'll far surpass $2,000 after all. But I would be happy with $2,000 this month. I think that's my minimum monthly premium that I would be happy with. Something else I want to talk about that I did, I don't know if I ever mentioned this particular trade, but I sold a Robinhood put right before Robinhood dipped initially, and because of that, I rolled it down and rolled it out in expiration. So originally, this put was a $46 put strike price, and the expiration was sometime in later June. And what I ended up doing, since Robinhood has gone up a lot, is I wanted to release the collateral sooner because June is still a month away, mid-June. I wanted to release that collateral sooner so I could start selling more puts. And what I did was I rolled up the strike price and made the expiration date this weekend. And I still netted a credit. I still made $4 doing that. I would have done it with a credit of $0. But I think this was a good move because it frees up my credit. This is probably going to, well, I know it's going to expire because I actually bought it back to close today for $2. So I made a total profit of $2. And now this money that was tied up and was going to be tied up till mid-June is freed, and I can look at selling puts on other stock with that freed up money. So I guess that's something to keep in mind. If you have a put that you've sold that's pretty deep in the money and it's far out in expiration, you can roll it up in strike price, but make the expiration closer to today's date in hopes that the price of the stock stays up between now and then, and you can release your capital sooner. I also, for fun, bought 100 shares of NVIDIA and immediately sold a covered call at 133. This was yesterday. So my average share price is 129, and I made $119 on selling this call. And if this were to be exercised on Friday, I make an additional $400 in capital appreciation. And I could roll it up and out into next Friday if I wanted to. I'm still deciding if I want to do that, or if I just want to make a quick few $100s for this week, and I'd also be happy with that. So yeah, not a whole lot of excitement, just waiting for some of these options to expire so I can continue some more, or if I have to roll them, do that. And as always, I'll keep you guys posted if you want, like I said, to help out the channel. And if you're curious for some more information about learning options, everything you need to know is in this course, everything that I know at least, and it's linked down below. Appreciate it. Hope to see you in a future video, and thank you so much for watching.